Hi, welcome to our podcast, which is done by employees at the Central Bank of Armenia and students at the Global Forecasting School. So I'm Coco, and today we're exploring some deep economic concepts and their real-world applications. Joining me is Haik, a fellow student at the Global Forecasting School, also an employee at the Central Bank of Armenia. Haik, it's great to have you on the show. But before delving into the topic that we want to delve in today, a brief introduction of what the Global Forecasting School is. It's a school that provides a very practical training opportunity to learn how to develop analytical frameworks, mainly for surveillance systems designed to make sense of a very complex world, and they use much more sophisticated nonlinear models to study the policy implications of nonlinearities and uncertainty. Haik, do you want to also add something about the Global Forecasting School before moving to the topic?
Thank you, Coco. I'm indeed excited to delve into this topic's video. Speaking of the Global Forecasting School, it provides dynamic learning environment which creates an integrated system to support decision-making under uncertainty. People at the Global Forecasting School have the opportunity to learn from and collaborate with top-notch economists and policymakers. We have designed multiple platforms, daily discussions, weekly meetings, seminar series, workshops, and so on. In a nutshell, dynamic learning environment isn't just one-shot game. It's an ongoing process. And the biggest requirement is the commitment to learn and grow constantly, perform as a part of the team, follow up to the mark work ethic.
So let's start with the topic, with endogenous money creation, Haik. So it's a concept often contrasted with traditional views taught in textbooks. Can you shed some light on this?
Absolutely, Coco. Traditional economics textbooks often portray banks as mere intermediaries, collecting deposits and lending them out. However, the concept of endogenous money creation, which we focus on at the Global Forecasting School, suggests that banks actively create money through lending. And this view acknowledges that every loan made by a bank effectively creates new money in the economy.
That's a crucial distinction, right? Now, let's talk about China's current financial situation. The reason this topic came to our mind is because of the latest developments in China. So let's talk about it. How does endogenous money creation play a role there?
Well, the situation in China is a perfect example of endogenous money creation in action. This rapid credit expansion, particularly in the shadow banking sector, and the build-up of risky loans reflect how money creation can fuel economic growth, but also lead to vulnerabilities. If not managed carefully, this could result in money destruction, low confidence, and potentially financial crisis.
And this leads us to the broader implications for the economy, right?
Exactly. In terms of economic downturn, the mechanism of money creation and destruction become even more evident. Banks become hesitant to lend, which reduces the money supply, leading to weaker economic conditions. And this is what we are observing globally. The financial conditions, the real economy, and banks' willingness to extend credit are interconnected in both good and bad times.
Yeah. So thanks, Haik. And actually that brings us to an exciting event. Diana and Shoger, again, students at the Global Forecasting School, also employees at the Central Bank of Armenia, will be discussing these concepts at a seminar with Charles Goodhart. They'll be focusing on how even in small recessions, these mechanisms play out, albeit weaker feedback loops.
That's right, Coco. Their seminar is a must attend for anyone interested in understanding how financial conditions impact the economy daily. They will also delve into how crises differ when there's excessive credit expansion, like the asset price bubble we have seen in recent decades. So feel free to join us on December 19th at 2 p.m. London time, 6 p.m. Armenian time, and 9 a.m. Colombian time. We look forward to having all our listeners with us.
Yeah, and let's not forget the staggering increase in household wealth in the United States during COVID, almost twice the GDP of 2019. So this actually exemplifies the extraordinary impact of monetary policies and credit expansion on the economy.
Indeed, Coco. These are policy-relevant topics that we are heavily invested on at the Global Forecasting School. And the Central Bank of Armenia will be launching the FPAS Mark II framework this January. And to support the launch of this new Prudent risk management policy framework, the Central Bank of Armenia and the Better Policy Project will be hosting a high-level symposium covering topics including, but not limited to, FPAS Mark II evaluation and challenges by prominent economists Charles Goodhart and Lawrence Summers. Join us on January 11th, 12th, and 13th, and you can find more details at the Better Policy Project's website.
Yes, indeed, Haik. Thank you, Haik, for joining me for today's podcast and being the guest mainly in this podcast for such an insightful discussion. Thank you very much. And to our listeners, be sure to check out Diana and Shoger's seminar for a deeper understanding of these crucial economic concepts and dynamics.
Thank you, Coco.